Hey traders, Raghee here, and in this recap video for Simpler Futures, I want to talk about an idea that we have been elaborating on, and it seems like it might be outside the boundaries of futures, but I want to kind of share with you how once you understand the mindset of especially understanding index futures, what kind of potential pipeline of trades it opens up. And I'm going to show you two recent examples of this kind of mindset. And it's really the intersection of sectors and the index futures, or more specifically, the ETFs and these index futures. So this is one of my layouts that I use in the room. And you'll notice it's got the S&P, the NASDAQ, and the Dow. And not that I don't use the Russell. In fact, you know, I'll explain how the Russell works as well. But the Russell has about 4 or 5 sectors so evenly matched in terms of weighting, it's not as effective. It doesn't have the same hierarchy of importance you'll see in, say, S&P, NAS, and Dow. So what I've done here is taken the heavily weighted sectors of each one of these futures contracts and then grabbed their coordinating ETF. So for example, let's just use the diamonds for a moment. Let's use the Dow and the diamonds, right? You've got a number of heavily weighted names, and we'll talk about this in a different video where we look at the individual futures contract and then look at the heavily weighted names within each one of these. One of the trades, by the way, that we talked about was the short on UNH based upon the pattern that we saw in front of earnings. The run in front of earnings and then an inside bar pattern we saw in that market. And that's just a couple of the criteria that needs to be met. But we'll talk about the individual stocks, but what I'm talking about are the sectors. So when you look at the sectors in the Dow, your top 3 are obviously industrials, technology, and financials. So you'll see the way that I do this is I'll put the XLI, then the QQQ, and then the XLF. Now we've been long the XLF for a little while. So that's one ETF that we've been taking advantage of with this mindset of understanding the sectors and with the same approach that we would use to trade the underlying futures contract. What are the individual names within the XLF? Where does the XLF sit on its own chart? And then how would that also in turn affect the underlying futures contracts where the financials, and in this case represented by the XLF, where would they have an impact? So you can see where there's kind of one idea of, okay, I'm interested in financials. Here's the impact the bank stress test. Here's the impact Friday's earnings and then Goldman, etc. would have on XLF. And then what does it in turn do to the Dow and the S&P? And it opens up a whole host of trades. One of them was the long trade off the 2685 to 2655 area that we talked about in the chat room. And while this is not a sexy trade, it for sure has been a pretty nice winner. Another one that we just set up, and this is yesterday, so I'm talking about recent trades. Another one that we set up was XLV. So the XLV is healthcare. So let's talk about healthcare for a moment. Let's go back to the sector watch list. Now notice how XLV has impact on both the S&P and the NASDAQ. Now the XLV had to set up all its own. As we saw here, it traded down into this zone right around the 200 EMA. And the trade that we actually set up was actually a shorter term day trade. So let me show you this exact setup from the room. All right, so you can see here, this is exactly what we sent out as an alert, and it was a 120-minute setup. The buy zone was 87.05 to 86.85 with a target of 87.40 that we hit here today. So if I have strength in XLV, I also know what it's going to do to the NASDAQ and the S&P. And I think any time that you're playing these futures contracts, S&P, NASDAQ, Dow, if you're going to be long or short, you need 2 out of 3 of these particular indexes working in that direction. If you want to get long the S&P, 2 out of 3 of the QQQ, XLF, or XLV has to be working in your favor. All right, so let that be kind of a filter or a kind of guidance for how and when you prioritize certain futures contracts. Now, we were long based on a number of criteria throughout most of the day. We still have a long position in the Russell. I'll walk through some of the setups we did in the premium video in the NAS, namely the 4 opening range trades we set up. I went through them in a lot of detail. If you go into the members area, live trading archive, you can check out the hour-long explainer video that I did midday to show you how to set up these 4 trades. And let me show you what they are. Let's see. There it is. Once the bell rings, these 4 particular trades are what I'm looking for, and I walk through how to set them up. And that's what got us long this morning in a number of markets. Now, one thing I promised I'd do is just cover really briefly the IWM, just so you know what they are. So when you look at the IWM or the Russell, you're talking about financials actually as the #1 sector, followed by healthcare, tech, industrials, and consumer cyclicals. Now, they only have a 3% difference between financials to consumer cyclicals. So they're all very much even, but the #1 is financials, #2 is healthcare, #3 is tech. Okay, so it doesn't look that dissimilar to the S&P, but all 3 of those are fairly heavily weighted, right? Equally heavily weighted. So think about the sectors, think about the ETFs, and ask yourself, as a futures index trader, how do I open the market up to more opportunities when a particular sector might be the better trade within an index futures contract than the contract itself, right? We've had great trades in financials, healthcare, and even one that's been ongoing in the XLY, the consumer discretionary, because that's been one of the leaders within the strength we're seeing in the NASDAQ, which, by the way, hit all-time highs. All right, more on this and a whole lot more in the premium video. See you in the next update.